we're going to do for either program. Okay. Now, Rate Advantage has, and I'm not going over rates either, offers a little bit better rate than the Edge is going to offer. Okay. It's the same 100% program here, but a lower debt ratio. So you're going to capture a better rate, but you're going to have a lower debt ratio than you're going to get with the Edge. I really want to pause here because this was a lot of information and just see what kind of questions we have.
All right, questions, anyone? You can send it through the chat. Let me see what I have here through the chat. Questions.
And 100% is just a great program. We all know that sometimes people need a little help. And the other thing I like about this, it's FHA, which means the sellers can pay up to 6% of their closing costs. So we're going to get somebody in like almost a VA loan if you can find a home where the sellers are going to pay these closing costs for very, very little. Same as my veterans when we're doing 100% for them. Very little money is going to be needed to close on this.
Okay, question. Somebody says, what is AMI?
So basically, what you want to do is go to HUD, and that's the average median income for HUD. Okay, so HUD for every county will tell you what the average median income is in that area. And we're going to do 115% of whatever that income is.
Okay, great. Some question. Someone says, if I have a bankruptcy, or if a person have bankruptcy, how does that factor into qualifying for this program?
Great question. We're going to follow specifically FHA requirements. So 2 years. We're looking at 2 years on FHA. So as long as it's been discharged 2 years and then the following month. So if we are June 2018, then we're going to be able to go forward July 2020. Okay, so following month after that, because we have to get an AU approval. And with bankruptcies, you can't get the system to approve you until it's the following month after the 2 years.
Okay, now, I want to, I know the answer, but I want to make sure that we're clear to everybody on the webinar. Now, this person says bankruptcy, right?
Yes.
You said 2 years. I know there's two different types of bankruptcy. So there is a Chapter 7, there's a Chapter 13. So why don't you be clear about the 2 years? Because I want somebody to think, hey, I did Chapter 13, and I started it, and I can do it after 2 years, and I just started last week. So why don't you make sure we are clear with the differences in the Chapter 7 compared to the Chapter 13?
That's a fantastic question. I'm so glad you asked it, Luther. So yes, FHA permits you to do a loan 2 years from your start date on a Chapter 13 of making payments. However, that's a manual, what we call a manual underwrite, where you're not going to get an approval through FHA. FHA is going to issue a manual, and Chenoa does not permit manuals. So we're going to be 2 years from discharge of a 7 or a 13. Both will have to be discharged 2 years in order to get the system to issue an approval with FHA versus a manual.
Good. That was my question. Just want to throw it in there. Make sure nobody get confused on that one. You know how that one works.
That's a great question, actually. Fantastic. I know I would have got calls on it.
Yeah, boy. Let's clear up that 7 and that 13. Two totally different monsters there. Okay. Another question. Somebody says, hey, now, you're saying I cannot do duplexes or multifamily. So I picked that question because I know a lot of folks like that owner occupied investment. So let's jump into the duplexes, the tris, and the quads with the owner-occupied investment as well as investor non-occupied.
Right. This particular program is not going to permit that. It's not going to permit the manufactured. It's not going to permit the multi-units. If you're going that route, which I actually have my own daughter getting ready to do that in New York, it's a fantastic way to buy your very first home, but they're not going to be able to take advantage of the 100% program. They're going to need to go with an FHA program at 3.5%. Or they're going to need to go owner-occupied conventional with 15%. So obviously the winner, if it's their first home, ding ding, is going to be FHA or VA. VA at 0 and FHA is 3.5. But you will not be able to use that program under Chenoa.
Okay, great. Another question here. How much money is available? 3.5% question mark.
Great question. Absolutely. It is 3.5% of the purchase price. So the reason I'm bringing this up, let's use Georgia Dream as an example. If you're buying a home through Georgia Dream and it's $100,000, you're going to get $5,000, right? Okay. Most people know that, and we'll cover that a little bit later. But if you're buying a home for $300,000, okay, under this program, I'm leaning more towards this program because you're going to get $10,500. So we would not use the Georgia Dream 5,000 because at $300,000 you will get more money through Chenoa.
Good. One last question, and then we're going to move on. Got some more questions for you, but I'm going to ask one last one, and then we're going to move forward with some information. Somebody says, "Hey, listen, I have a very unique situation, and this is a unique question. It's a real estate agent. Say I have a current customer that relocated here almost 2 years ago. Here, I am assuming is Georgia. Relocated to Georgia almost 2 years ago. Have not updated or registered in Georgia. Have worked here for 2 years. Is there any obstacle with this person getting qualified?"
So far, nothing you're telling me is an obstacle. I mean, as long as they don't own a home currently somewhere else, they can't have owned a home in the last day. 1 day. So that's a big difference between the Georgia Dream 3 years. 1 day they haven't owned a home. It doesn't matter how long they've been in Georgia because this program is good anywhere in the United States, period.
Good. I have some more questions. Let's rock and roll forward, and then I will take some more questions in just a minute, okay?
Okay, well, let's go on to some, just small guidelines. The next one's going to be just some small guidelines. Let's just kind of cover those. They may answer some of the questions. Bankruptcy, 2 years. Really 2 years until the following month, okay? So keep that in mind. You won't get an AUS approval otherwise. Have to be approved eligible. That means the system for FHA says we can do it and we don't need a manual underwrite. Okay, so there's ways to tweak that. I know how to tweak it to get it done. For the most part, most people who call me, just so you're aware, 90+% fall into the edge. Okay, so that means we're going to need consumer credit counseling. Okay, and it's good, right? They haven't owned a home before. The counseling covers all kinds of stuff. Most people who come out of it tell me they learned some fabulous information that they didn't even know. So it's good information. First-time home buyers and non-first-time home buyers, okay? So they could have not owned a home for 1 day. Super exciting there, okay? Because we had a bunch of people, right, that maybe sold their homes for losses or whatever, and they don't have the money saved up. Maybe they had a medical issue, something. It's not for us to judge. They don't have it saved up. The other good part, we don't cover rates here. Otherwise, I got to have all those disclaimers. You know what I'm talking about. Fixed rates only. Okay. Are they higher than FHA? Of course they are. Chenoa sets those guidelines. We don't get to even negotiate with them. Chenoa has it for everybody across the country. We want to use it. That's what the rate is. It's my job to go over that with your customer. And then I also go over what they could get if they win a regular FHA. Knowledge is power. So we do pass all that information on to them. So that is that one. So I just want to stop here for a second and see, because we're going to move on to Georgia Dream after this. So Chenoa questions here would be great.
All right, let me see what I have here. Okay, question. I'd rate Advantage forgivable, or do you have to repay it at all?
Okay, so for the lower, good question, the lower to moderate income, okay, people falling below the 115% typically do not have to pay it back. Typically, it's going to be forgiven after, and I am so sorry, it's going to be forgiven after 3 years, okay? All the other programs, the higher income earners, that type of thing, they're going to have to pay it back. Or if they want the better rate under Advantage, because it's significantly different, then they will have to pay it back. And I cover all those options with them, okay? It's my job to go through each and every one with them, make sure they understand their choices, because there's more than one choice, and then they can make the best decision for them and their family.
Good. And here's a question, and I think you have said it, but I want to make a comment and a point. The question is, what is the credit score requirement? And I remember you said a 640. Here's my question, because this is something that I don't think that we stress enough with everybody that we do business with, and I want you to kind of go into this. I have actually sent individuals to you, and you said, Luther, they're a 640, or they're a 638, or they're a 635, and they're close enough that we can work this person, and with a week or 2 weeks, we can have this person where they need to be. So one of the points that I want to make to all of the agents is, what I want you to do as an agent is to send the client to Tamara. If you're a home buyer, the best thing is to contact Tamara, because don't get so caught up in down payment or get so caught up in the credit score, because remember, Tamara is telling us just a few tools in her big arsenal of tools. So she got a lot of tools, she got a lot of programs, she got a lot of guns in the bullet to get the jobs done, right? So let's not stress that too much. Would you agree, Tamara?
I absolutely agree, because even if, let's say somebody is a 590, but what I get most when I talk to people who are 590, and this week alone over 20 people, I then tell them, this is exactly, not guessing, in writing, this is exactly what you have to do to get to the 640 or get to the 660 for the program you want. And they get that in writing, and then they know. Now, somebody who's, you're 450, you really have a lot of work to do, and you know what that is. You need to do that first. But you're 590, you're 600, you're 610, you're really close. Maybe you just need some advice on how to tip it and go a little bit higher and know exactly how to do that and relieve that wonder of how to make that happen.
Absolutely. Yes, and more yes. Okay, another question here. Somebody says, so let's recap. This is a recap question. With this loan, it is 100% financing, meaning zero money down. This does not include the closing costs, and I think that's important for us to get into that. And then it says the interest rate, will it be higher than conventional or FHA? So let's break this down into two questions. First question, when you say no money down, right? Does this include closing costs? Let's talk about closing costs. And how can closing costs, because I guess the question, and I know a question that a lot of people have is, when I say no money down or zero down financing, does that mean I will definitely not have to pay any closing costs as well?
That will be between you, the seller, and the agents involved, okay? This program is for your down payment. That's it, down payment. They're going to forgive it after 3 years if you're eligible for that program, or they're going to give you a 10-year loan to pay off the down payment that runs with the first mortgage, so that you get 100% loan. But has nothing to do with closing costs at all. Now, sellers can pay up to 6%, whether they will or won't. That's on your negotiating with them. So what I tell customers when I am talking to them is, I say, listen, you may be in a seller market area where you're trying to buy, you may not, because I talk to people all over the country. But you need to be prepared to come in with a couple $1,000s, because if the sellers don't agree to all of it, then you're going to have it. They might pay this $10,000 for your down payment so you can have 100% loan, but you still have X closing costs that are going to need to be paid. Any portion of X that isn't paid by the seller, you're going to have to pay this.
Absolutely. And let me get to this question from a broker standpoint. So I'm the broker of the deal. I'm writing the contract. Here's what our client needs to understand. Number one, typically when we write this contract, they're going to want earnest money. They're going to want you to have some skin in the game. So you're going to have to put up typically $1,000 worth of earnest money. Now, when you close the deal, you get credit for the earnest money. But typically, sellers don't want you to write a contract with absolutely no earnest money, no skin in the game. Now, I always tell my clients, I can try to negotiate a $500 earnest money, but typically earnest money is $1,000, and some of the time, even 1% of the sales price. So on a $300,000 house, the seller might negotiate and want $3,000 earnest money. Let me repeat, you do get credit for that when you close. That's one thing. Next thing, let's talk closing costs. What's closing costs? Well, that's like attorney's fees and other fees to close the deal. So we're going to have fees to actually close this deal. That's closing costs. Also, I always tell my clients, listen, the appraisal is your responsibility, and that is not a closing cost. That's one that gets confused many times. You're going to have Tamara, the mortgage company, is going to say, hey, you need to pay for an appraisal. So that's a cost, an appraisal. Many times clients want an inspection. So do you want the property inspected before you purchase the property? So that's a cost as well. So whenever I do a deal as the broker, I always say, listen, let's calculate some earnest money. Let's talk about appraisal fee. Let's talk about inspection. Even if it's 100% financing, you're going to still have some skin in the game. All right. Because as the broker, I have had clients call me and say, hey, the agent said no money down. I'm planning on never, ever, ever, never paying any money. No, you're in for a bit of a rude awakening there on this one. All right.
Well, and that's a great point, Luther. I typically will tell people, even with this program, you need to have $1,800 to $2,500 plus because you've got to have your earnest money. You have to have your appraisal. When I see someone who comes to me and I see $59, yeah, that's an actual person this morning, $59 in their savings account, I typically will tell them, you need to either A, save up to a $2,000, or B, show me proof of who's giving you a gift from your immediate family to show me you have $2,000 today. And that is not a guarantee it's going to be that little, because if you can't negotiate the sellers to pay an X amount in closing costs, you're going to need that too. And so I make sure that they have that information right up front, because we don't want them out shopping. We don't want you driving people around in your car or meeting people now that we have COVID if they can't come up with that money.
Now, with that being said, I have closed deals where my client have received a check at closing where they didn't have anything in the deal. So they put up the earnest money. And the way I negotiated the entire deal for my client, the client got all of the earnest money back at the deal. So can that happen? Absolutely. Now, agents, here's what I want you to do, and here's how I handle it. I always tell my client, my goal is to always get you into this with as little money as possible. It's a little different on our end than Tamara's end. I don't throw around numbers. I don't say 1,000 or 800 or 3,000. What I do is I say, listen, here are some things we need to start talking about, that it's a possibility that you're going to need to pay. I'm going to try my best to save you as much as possible. And yes, you guys, I have had deals where my client received a check at the closing and it was 100% no money out of their pocket. But it cannot happen all of the time. Now, a couple of questions here. Somebody says, with all of that being said, Georgia Dream is going away on June 30th. Do we have a ticking time clock on Chenoa?
Well, let's clarify that question, and I'm not calling you out. I just want to do a clarification. Georgia Dream, yes, it ticks to the end of June, but only for the HHF. That's ending in 3 weeks, and hopefully you're taking advantage of it. I've had more calls in the last 2 weeks on HHF than last year. But then Georgia Dream is going to continue with their other programs, which we'll cover shortly. But this has no time frame. It's not going anywhere. It's a program. Now, could they ever cancel it? Sure, they could. But at this time, there's no plans for any canceling.
Excellent question. Next question. Talking about cost. What's the cost of the appraisal?
Hello?
Yes, did you hear me?
I lost you for a second. I don't know if anybody else did or if it was just me.
All right, question. The question is, since we are talking about costs, what is the typical cost of the appraisal?
They range between typically $500 to $700. Unless you get into properties, you know, 800, $1 million, which is not going to be this program, and then they can hit $1,000, $1,200. They're all ran through what's called an AMC, an Appraisal Management Corporation. They're no longer done by the banks or lenders anymore. All appraisers in the U.S. are independent.
Good, 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 good. Somebody says here, can a client utilize both Chenoa and Georgia Dream for a loan?
Not at this time, no. They are two separate programs. You cannot link them together.
Okay, now I have a question here, and I'm going to read it the way it's typed up. It says, don't you need 2 months mortgage payment?
Don't I need 2 months mortgage payment.
So
We
I
may want
guess,
to ask that individual to clarify,
yeah.
because this is a purchase. So I don't need 2 months, unless they're talking about reserves, meaning you have 2 months in reserves. I do not need that if FHA does not want it. FHA does not always want it. They may want it on a higher debt ratio person. They may want it on somebody who doesn't have a lot of credit listed. But if FHA doesn't ask for it, I don't ask for it. I go straight off the guidelines.
Okay, I think on that one, she'll give. Oh, okay, okay. The question is, do you need 2 months mortgage payments in the bank along with the earnest money, along with the appraisal?
No, not unless FHA says you need it. If FHA says you don't need it, then I don't need it. So sometimes maybe somebody's not getting approved. They've got a lot of dings all over the credit, whatever the case may be. They're having trouble getting FHA to say yes. So sometimes what I will do with that is I will add what you're calling reserves. I'll start with 1 month and then I'll go to 2. If I can get it approved at 1, there you go. If it takes 2, there you go. But typically, FHA does not require that. That's only for somebody who has extremely challenged credit or challenged employment history.
Gotcha. Okay. Excellent. Okay, let's move on. Next.
Okay, so I know we didn't get all the questions answered on the next slide, so I brought it back, but I grouped it all together nice and simple for you. So go ahead and load it all up there, Luther. What I wanted to put in here was the 4 different programs, nice and simple for you to be able to see. They have a standard $5,000 for everyone. They have a $7,500 one for people who are disabled or people who live with them and are disabled. Okay, so $5,000, everybody, whole state of Georgia. Choice, disabilities. Okay, $7,500 for nurses, educators, those types of individuals. Okay, and you have to prove it. We're going to have to prove it to get those funds. And finally, what you were referencing earlier, HHF, $15,000, certain counties only. The other ones are all counties. HHF is only those counties, and that ends in another 3 weeks. So those people will be out shopping very diligently over the next 2 weeks to try to secure those funds before they're gone or the time has passed. So these are the 4 different types of programs, and pretty soon we'll be down to 3. So although HHF is gone, the other 3 will remain. The big piece to understand about this, the big piece, is the HHF, you never pay it back if that is your primary residence for 5 years. $15,000 that you never pay back. Hello, I wish somebody would have given me $15,000. The other 3, you will pay it back, but you will not pay it back until you either no longer live in the home as a primary residence, you sell the home, or you refinance the home. Okay. Otherwise, you're not going to pay it back. I was doing, and people make a big deal out of it. I don't make a big deal out of it. I was speaking to a customer this morning, and she said this is her retirement home. She's never going anywhere. She's never bought a home. She is 68 years old. And I said, then why do you care whether the $7,500 has to be paid back or not? Because you just told me this is your last home. You're never ever moving again. Oh yeah, I guess I don't really care. Exactly. Because it's paid back when you sell it. When your home is appreciated, that's when you're going to pay it back out of those funds, not out of your pocket. unless, of course, you don't sell the house for enough. So any questions here? I know we got a couple, I think we have one slide behind this one to go with it, but I wanted to stop here for a second and just answer a few questions. Luther?
Oh, no. Hey, listen. Loving it. Straightforward. Like this slide. Definitely on the money. Mention one thing, though. Let's not forget one thing. With the HHF, go over the target areas for us.
Okay, so right at the bottom there, let's talk about these. Fulton, DeKalb, Clayton, Douglas, Muskogee, Chatham, and Bibb. So if you're calling me about Cobb for the 15,000, it is not applicable in that county. They need to move into one of the four. Now, I had somebody who called me about Cobb, but they're actually moving into one of these four because they look at an opportunity that in 5 years, they'll have built up equity, number one. And number two, they're taking that 15,000 and using it for the entire down payment, so that they have equity of the 15,000 built in, and the state of Georgia paid for their down payment for them. So, sometimes you might be talking to somebody in not one of these counties, but if they know they could get this, they may change counties for you because that's such a substantial amount of money. Okay. So don't necessarily assume they won't, but you're running out of time very much.
Yes. Now, question. What is DTI?
Okay, very good. Very good question. DTI is your debt ratio. Okay, so we do have on a different slide, but the debt ratio for Georgia Dream is going to be much, much lower than Chenoa. So the very high would be 43%, but most people fall into the 36%. So they have two different ones. So that is probably the number one reason I see people not use this program, because it's going to limit them on the house that they can obtain based on their debts that they have. And a lot of times they just don't want that price range. They were wanting something more. So that's my number one reason people will not close with the Georgia Dream.
Great. Next question. What is PUD?
PUD. So if a property has a PUD, and as a realtor, PUDs, a PUD is okay. It depends on, what's going on. That's something for later. I'll get into it if we have one, and we'll address it at that time.
All right. Very good. Okay. No, but this is very good. And here's the point that we definitely want to make on this particular area is HHF is going away. Everything else is still good to go. Correct?
Yep. Correct. Going, almost gone.
There you go.
Take advantage.
There you go. So Georgia Dream is still here. It's just out of the four, only one is going away.
Right. Correct. Now, and I've got the requirements. We can pop them all up there. So the difference here, so you're going to see the very first line item is a difference from Chenoa, which would then veer me in the direction of them. 3 years, and you can't have owned a home for 3 years, okay? Then also owner occupied only, of course. This isn't for investors. Has to be a 1-unit, single family, condos, PUDs, 203Ks, rehabs are acceptable. However, I will pause here. During COVID, we are not doing 203Ks. Okay, so if you're coming to me because you want a 203K on a Georgia Dream, I'm not able to help you with that at this time. And I tried to find a lender for someone else and called 15 people, and none of them were doing it either. So I think it's just really because of COVID right now. But we'll open that back up shortly. What's not eligible, 2 to 4 units, second homes, of course, investments, of course, manufactured, and co-ops. We don't see a lot of co-ops here in Georgia, but I do see them in New York and Florida. You're going to have to take the home buyer counseling. It's absolutely required. And I push all customers who I'm talking to take that on the day, right after I approve them, immediately. I get them to do it even before I'm trying to issue a letter for them. They have to bring in 1% to close. So I'm looking on their bank statements. Do you have it? Show me you have the money before we waste your time. Liquid assets not to exceed 20,000. That means somebody who's calling me that has 100, 200,000 in the bank, and yes, they call to try to get this program and have $200,000, and it's not eligible for them. Okay. This was for somebody who just cannot come up with the money, not for somebody who could pay the 20% down payment without the assistance. Okay. Borrower must not have been convicted of any of those in the last 10 years. So we do pull a report to verify that we do not have any of those convictions. If they do, I move them over to Chenoa. Okay, I just move them on over.
All right, excellent, excellent, excellent. Any questions? Let me check my chat real quick here. Okay, questions. Okay, yeah, we've answered that. Okay, are the home inspections similar to FHA standards?
Yes, we're going to follow FHA. Now, Chenoa, Chenoa's FHA. Georgia Dream is VA, FHA, USDA. So it is not saying only FHA. You can use Georgia Dream for other programs. Okay. So maybe they're a veteran and they can't get the sellers to pay any closing costs and they're disabled. We can use the $7,500 with Georgia Dream to help pay those closing costs and close as a VA Georgia Dream.
Let me jump in here on this question because I don't know because I think there's a part of this that I want to make sure but that you get and because you probably did not hear the question. Here's the deal, you guys, and I want to make this point. The question is, are the home inspections similar to FHA? There's difference between a home inspection and a appraisal. A home inspection, Tamara, do you care about the home inspection? Is a home inspection required?
Thank you. I'm so sorry. I misunderstood the question. Let me very, very much clarify something for you. Okay. We don't care about the home inspection at all. And in fact, please don't forward your home inspection to even if you're not using me, don't forward it to your lender because you don't want the underwriter to see that home inspection. Then she's going to ask for every single thing on that inspection. You keep that inspection between you, the seller, and the buyer, and nobody else. Nobody else.
Yes, I thought I would jump in there on that one. Here's what the question should say. Because understand, first of all, from a real estate broker end, and I'm talking real estate broker, not the mortgage end, but the real estate broker end, it's not required for you to have an inspection. It is strictly for the comfort, and it's between buyer and seller. When you do that inspection, Tamara's 100% right. We're not sending that to Tamara. That's none of Tamara's business. The buyer and seller, the buyer, I have done a lot of deals, and the buyer says, I don't want an inspection. I don't want to pay for it. It is not required. Now, that's home inspection. Now, this question says, is the home inspection similar to FHA standards? What this should probably say is appraisal. So home inspection, that's between buyer and seller, and the agents negotiate what will or what will not get, what will or what will not happen on the inspection. Now, as an agent, if I see certain things on the inspection that I know will also cause problems on the appraisal. That's where we have problems. Tamara, she doesn't care about that inspection. But Tamara, do you care about that appraisal?
Oh yeah, if there's something on there that's a problem, we're going to ask you to fix it before we close.
So the question should say, with Georgia Dream and Chenoa and those different things, is the appraisal FHA standards?
The appraisal for Georgia Dream will be dependent upon the program that we go through, and they're not as harsh as an inspection. None of them are as harsh as an inspection. But if it's VA, we're going to get a VA appraisal. Is that, more in depth than a conventional? Absolutely. But they'll also do a conventional, an FHA, and a USDA. But that's really going to be dependent upon the borrower, what their credit and conditions are, to qualify, and where is the property. Obviously, I'm not going to do an FHA loan if they can qualify for USDA. So we need to look at all aspects in order to make this work.
Absolutely, absolutely. Okay, next question. How does deferred student loans impact DTI, or does it even impact it at all?
Say that again. I'm so sorry, Luther. What? Say that.
Deferred student loans. So the question basically is, how does deferred student loans impact DTI, or does it even impact it at all?
Oh, it absolutely does. And unfortunately, it's really impacting it right now during COVID, because all the student loans have gone into forbearance. And so because they're all in forbearance, 1% of the balance is being used. So conventional will let you use an income repayment, and FHA is going to use 1% or whichever is higher on an income repayment. But every student loan went into forbearance that was a federal student loan. So now we have to use 1% across the board on all of these. So if they owe $200,000, I'm using $2,000.
Now, let me make sure I understand this. You said all student loans, or just the student loans that went into forbearance?
Pretty much, if it was a federal student loan, it went into forbearance.
Whether the person wanted it to or not?
Correct. The federal government put them all in forbearance.
Just automatically just put them in forbearance whether the person wanted this or not. They just did it.
They just did it. Yep.
I didn't know that. I did not know that.
Now, you've got some other student loans out there. They might say, Chase student loan, or they might say Wesley College student loan, or they might say something along those lines. Those were not placed in forbearance.
Oh, wow. And this was just automatic, huh?
Yes.
And so the person didn't know this was coming? It just happened?
Yeah, the government made an announcement that they placed all student loans in forbearance to help during COVID.
Okay, here's somebody saying, mine was not put into forbearance and I am repaying it per normal. Am I affected?
No. So somebody who maybe is in an income repayment on theirs and it's a smaller amount, if they don't fit FHA, then we're going to look at conventional. Maybe conventional is a better deal for them. Maybe it's not. I have to look at the whole picture. It's more of a whole picture and not just a one question item. I have to take into account income, debt ratio, credit. How can I get it approved through that particular system? So all of that will be looked at when trying to make that decision.
And here's you done really open up a whole can of worms here.
No, let's not open that. That's not what this is about. You can call me if you want to talk to me. Okay, but this is about Georgia Dream. We need to stay on Georgia Dream.
Let me ask this one because they're blowing me up. here's somebody saying, hey, if I took mine out of automatic forbearance and I'm repaying it as normal, will this affect me?
No. Well, and I want to be clear. Just because it's in forbearance doesn't mean I can't close. Okay, you might be thinking of a mortgage in forbearance and having to wait 12 months from that. This isn't about that. This is student loans, which is perfectly acceptable for them to be in forbearance. All it is how I calculate the payment. That's it. How are we going to calculate the payment? And it will use 1% for FHA or higher if it's income repayment. So for some people, they're getting a better deal going FHA now that these are in forbearance. But on conventional, it uses the income repayment, or if it's in forbearance, 1%. So if you have a really low income repayment, then we can get that through conventional. So if they put it back in income repayment, shows on credit, which I've had some people do, then we run it through there. But I'll tell you, conventionals is pausing on some of those income repayments. You still have to get an approved eligible with that income repayment, and I very rarely see any zeros go through. You know, it has to have an amount in there in order for it to go through.
Okay, good. Let me do this as well. Okay. Let's take a lot of these case by case, because I know some folks are on here saying, hey, you know, I have a student loan and mine is not in forbearance. Will you still hold it against me? Yada, 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 yada. So let's do this, you guys. You guys have Tamara's number. Let's take these situations case by cases. It's a lot of y'all on this webinar, and we would be here until next week, going over individual situations on forbearances and loans and student loans, because now questions are coming in on regular loans and what if they pause their regular loan and this type of thing. So Tamara's there. That's what she does. She will definitely help you. Let me say this, and here's the point I want to make at this webinar. Real estate agents, right? We do not want to become mortgage professionals. What we want to do is we want to send our client to Tamara, because whether it's Georgia Dream, Chenoa, VA, FHA, whatever, she's going to be able to say, this is the best situation for the client. This is what I recommend. This will work. This will not work. This is what they should do. This is what they should not do. This is what we need, and this is what we want, right? We do not want to start to become mortgage professionals. And at the beginning of the webinar, I gave everybody Tamara's personal cell phone number. Feel free to give her a call. She will more than be able to answer each and every question, but that's out there, okay? All right, you guys. Tamara, as always, wonderful job. Truly appreciate it. You did a wonderful job today. Thank you very much.
I really appreciate the time. Thank you so much. And my cell number, one more time for you, is 770-896-5001. Again, 770-896-5001. I appreciate your time today and hope everyone has a great day.
Very good. Very good. Thank you, you guys. And do not forget, if you are a licensed real estate agent and you are not a part of the Platinum family, we would love to speak to you about career opportunities with Platinum Real Estate. You can contact us via email, careers@platinumrealestate.com. You can visit our website, platinumrealestate.com. And our phone number is 404-994-4600. But if you just remember Platinum Real Estate and go to our real estate site, platinumrealestate.com, you will be able to learn all about Platinum Real Estate and all of our great opportunities. Also, do not forget, next week, on next Thursday, I'm going to be talking about the virtual agent, how you can reduce costs, increase income, run everything from your house, everything from your home. I am going to show you tax advantages. I am going to show you how to put together your business and run your business with COVID-19 out there now. With this big change, we are working from home more. So we need to be able to maximize the home office. That's what next week is all about. 12:30 next Thursday, same place, same time. All right. You guys, I am Luther Ragsdale. Thank you for joining us today. Great job, Tamara. Great information. Thank you, everybody, for tuning in. I'll talk to everybody next week. Thank you, and God bless you.